Hello, everyone. Welcome to our Tip Thursday. Hope everybody's having an awesome. Hold on, that's not what I want. Hope everybody's having an awesome week. Sorry so much for the delay there, having a couple of tech issues, but I think we're good, and we're going to go ahead and dive straight in. Today's Tip Thursday is all about the 2021 tax law changes. There have been some already, mostly because of the COVID-19 pandemic. We anticipate that there may be more once we see what's happening with the bill that's currently sitting in Congress. But I wanted to get you an update on what's going on right now so that you're prepared for the 2021 tax season. So if you're here live, definitely say hi in the comments. Don't forget that I can't see who you are until you click the link, I guess, right above my head. That lets me, lets Facebook, if you're on Facebook, tell me who you are. And we're going to go ahead and dive in. So let me pull up my slides here real fast. Let's see. Okay, cool. And I'm working on it. All right, there we go. Let's get rid of that background. We don't like that at all. I forget that every time. All right, so 2021 tax law changes. Let's talk about what has changed so far. So the first thing I want to touch on is the child tax credit. This is the big one. So if you've got kids, this is something that you may already be aware of. The child tax credit has been around for a while. It was originally $2,000 per kid up to age 17, but it's actually been expanded. And the way we want to think about this is the original of 2000 and the expanded piece, because there are different rules for each. So the original part, 2000 per child. The expanded part is $1,000 per child, or $1,600 if they're 5 or younger. Now, the original amount, that $2,000 piece, is reduced once your income hits $200,000 if you're single or head of household, or $400,000 if you're married filing joint. So it's actually a pretty nice threshold that allows a lot of people to be able to take at least some, if not all, of that $2,000 per child tax credit. The expanded amount, that $1,000 or $1,600, gets reduced once your income hits $75,000 if you're single, $112,500 if you're head of household, or $150,000 if you're married filing joint. So that expanded piece actually phases out much quicker than the original piece. So if you make, over those numbers, you're probably not going to see the additional child tax credit benefit this year, unfortunately. But for folks who make under those amounts, this is one of the exciting things about the 2021 tax law changes is this additional $1,000 or $1,600. Now, another thing that's been changed for the child tax credit in 2021 is that the amount is fully refundable. So what we mean by this is a tax credit can be either part non-refundable or refundable. And by the way, before I explain that, let me explain one other thing. A tax credit is different than a deduction. So a tax deduction reduces your taxable income on which your tax liability is then calculated. A tax credit reduces your tax liability. So if that felt like, oh my gosh, what did she just say? Let me give you an example. Let's say you have $100,000 of taxable income, and we're going to make the numbers easy. Let's just say your tax rate is 20%. So $100,000 of taxable income, your tax on that amount at 20% is $20,000. Let's say you end up with a tax deduction of $50,000. I'm going to go with really crazy numbers here just for easy example purposes. That tax deduction is going to reduce your taxable income of $100,000 down by $50,000 to $50,000 of taxable income. So now your 20% tax rate only gets imposed on the $50,000, meaning you end up with a $10,000 tax bill. So you've ended up saving $10,000 in taxes. But now let's say that 50, again, really extreme numbers here, but let's say that $50,000 is a tax credit. So your taxable income is still $100,000. Your tax liability is still $20,000, 20% of that $100,000, but you have a $50,000 tax credit. Wouldn't that be great? There's no tax credit, by the way, that I can think of for individuals. It's $50,000, but this is a dream scenario. So $20,000 of an income tax bill, but you have a $50,000 tax credit. That tax credit reduces that income tax bill dollar for dollar, meaning that $50,000 tax credit is going to totally wipe out that $20,000 tax liability. So credits are always better than deductions. And when we say a credit is fully refundable, what we mean is that even if you don't have a tax liability, you will still get the credit. So let's use my extreme example of your tax liability is $20K and you get a $50,000 tax credit. That $50,000 tax credit is going to totally wipe out your $20,000 tax liability. But then there's $30K of that tax credit left, right? If it's refundable, you get a check for $30K. If it's not refundable, you don't get anything once you've reduced your tax liability down to zero. So that's the exciting part about the fact that the child tax credit is fully refundable in 2021, because even if it reduces your tax liability down to zero or you don't have any tax liability, you're still going to get the remaining amount of the credit sent back to you in the form of a refund. Now, with the child tax credit, half is paid through advance payments. So many of you may have gotten payments starting in July hitting your bank account for 50% of the credit amount. These were done July through December. If you didn't, it's because the IRS didn't realize that you had a kid or didn't think that you qualified based on your prior year income. If you didn't get these advance payments, don't worry. You can get them as long as you're eligible. You can get them when you file your tax return. However, this is the really important point that I want you to hear about this. Everything I said so far has been mostly good. This is the not so good thing. If the IRS sent you too much money in advance for these advanced child tax credits and you do not qualify for those credits, you will have to repay those amounts, at least as of right now. We'll see if Congress or the IRS decides to change that because of the pandemic, but I doubt it. I think this is going to end up being the case. So if you did receive some of this advance money, I want you to either put it aside if you're not sure you qualify, or go ahead and see if you qualify. And then it's too late to stop the payments at this point. We're in December now, but just keep that in mind. Okay, so the other change in kind of that child world is to the child independent care tax credit. Now, this is a credit that gives you money back for child independent care expenses. So things like daycare. And it covers children or dependents if it's a dependent child under the age of 13 or a qualifying disabled dependent or spouse that lives with you. So if you have a family member, for example, that's disabled and you pay for care for them during the day, this could cover some of that. Now they have increased the amount that is eligible. So in 2021, starting in 2021, you can take a credit for up to 50% of up to $8,000 in eligible expenses per person. They've increased that amount. It's now $8,000. So you can potentially get more of a credit here, which is exciting. However, keep in mind there is a phase out. It starts at $125,000 of income per year. So if you make more than that, you may not qualify for this credit. Now, we also, at least in 2020, had the recovery rebate credits. I don't know if everyone remembers this, those stimulus checks, right? We got 2 stimulus checks, generally speaking, in 2020. We had to fill out a form about them on our 2020 tax returns. It's going to be the same thing in 2021 because there was a 3rd stimulus check in 2021. So it was $1,400 per taxpayer plus $1,400 per dependent. If you did not receive a check, but you are entitled to this stimulus amount, then you can claim it on your 2021 tax return. So this is an important thing to make sure that you claim. I will tell you though, on the flip side, if you did receive money, one of the forms you're going to have to fill out on your 2021 tax return is similar to the 2020 tax year. You're going to have to say how much you're eligible for and how much you received. This is the biggest issue I have seen on tax returns coming out of 2020 is clients will say, oh, I received X, and actually they ended up receiving a different amount. And so we put the wrong amount on their form because they said, oh, I got this number, and actually they ended up getting a different number. So make sure that you go back and look to see exactly how much you got for the stimulus check and that it gets reported correctly on your return. Now, if you're curious if you qualify for the $1,400 per person stimulus check, this check phases out at $75,000 of income if you're single or $150,000 of income if you're married filing joint. So again, if your income is above that, you don't qualify, but if it's below that, you should have received a check. The great news about the recovery rebate credit is it's not taxable income. So that $1,400 you got, or maybe more if you've got kids, is not taxable income. It's not subject to tax. And even better news, unlike the child tax credit, if they sent you a stimulus payment and you were not owed it, it does not have to be repaid. So good news there. Okay, there were some minor changes in the world of retirement plans, nothing that has to do with COVID, nothing that astronomical. Well, I shouldn't say nothing that has to do with COVID. The required minimum distributions, if you're 72 years old or older, were waived in 2020 because of COVID. That requirement has come back. So you've got to take those required minimum distributions again. That is back into effect. Otherwise, the income ceiling limits have increased slightly on both Roth IRAs. So this is the amount of money you can make and still contribute to a Roth IRA, and have also increased on the traditional IRA. So this is the amount of money you can make and get a deduction for contributions you make to a traditional IRA. Those have increased slightly. That has nothing to do with COVID. Those numbers tend to increase a little bit every year anyway. Unemployment is a big one that I think is going to trip up a lot of people in 2021. If you recall, in 2020, if you received unemployment compensation, you could exempt up to $10,200 of your unemployment benefits from tax. That is not the case in 2021. As of right now, 100% of your unemployment compensation is taxable in 2021. So if you got unemployment benefits, you're probably going to have to pay tax on it. Another change because of COVID, and this is a good one, is related to charitable contributions. So you may recall in 2020, because of the COVID-19 pandemic, they passed a provision that said that even if you do not itemize your deductions, so meaning you take the standard deduction, you can deduct up to $300 for charitable contributions, cash charitable contributions, cash meaning cash, credit card, check, for cash charitable contributions that you paid in 2020. They extended this through 2021 and they doubled it. So in 2020, it was $300 total. In 2021, it's up to $300 per taxpayer. Okay, so $600 total. Even if you don't itemize your deductions, you can get a deduction for charitable contributions. They have also continued to suspend the 60% limit on deductions for cash donations. Probably not going to matter for most of us, but there used to be a limit that said you could only deduct up to 60% of your adjusted gross income. They've gotten rid of that. Now you can deduct as much as you want. And again, that'll probably change though, by the way. That was a COVID specific thing. So that'll probably change in future tax years. We've seen some progress in student loan relief as well. So normally cancellation, forgiveness, or discharge of debt is typically taxable income, meaning it's subject to tax. But in 2021, they suspended this rule and they actually have done it through 2025. So you've got a few years. That says that most canceled student loan debt is not subject to tax if it was incurred for post-secondary education. There are going to be some specific rules around this, so check with your tax accountant or your tax preparer. But generally speaking, if you had your student loan debt canceled in 2021, you may be able to avoid paying tax on that cancellation of debt income. They've also extended the rule through 2025, allowing workers to exclude from wages up to $5,250 of college loans paid by the employer. So if you are a business owner and you have employees and you pay you give them student loan relief. Some companies do this where they'll pay some of their student loans. You do not have to include up to $5,250 of that in their taxable wages in 2021 through 2025, which is great news. In the education tax breaks world, not such great news. The tuition and fees deduction was repealed. So there used to be a deduction that allowed you to basically deduct tuition and fees, much like it sounds like. They've gotten rid of that. They have, however, increased the income phase out level for the lifetime learning credit, which is another credit that you can take for education costs. So they've increased that. It may help some folks, but just be aware of this. It's getting harder and harder to take a deduction for paying for education. I also wanted to touch on the advanced premium tax credit repayment. So this is related to health insurance premiums purchased or paid for plans purchased through the marketplace. So the advanced premium tax credit, let me back up a step. The premium tax credit is a tax credit that gives you assistance in covering those premiums for healthcare plans purchased through the marketplace. The advanced premium tax credit repayment basically gives you that money in advance, much like we saw with the child tax credit. So what they've done, they've made some changes to this program this year. They've increased the credit amount, and the mechanism isn't that important, but I'll say it anyway. They've increased it by reducing the percentage of annual income required to contribute towards the premium. So a lot of people may see that they're going to get a bigger credit amount here if this is something you've qualified for in the past. They've also allowed this credit to be claimed if your income is above 400% of the federal poverty line. In the past, that wasn't the case, so that's a win as well. Now, in 2020, if you received more advanced premium tax credit payments than you ultimately qualified for, you did not have to pay them back. They did that because of the COVID-19 pandemic. It was a one-time thing. That is not the case in 2021. So in 2021, if you receive more advanced premium tax credit payments than you are entitled to, you have to pay them back. This is how it was before. We've gone back to the original rules. Okay, I'm not going to go into all the details of these, but just know that there are two important credits if you had to miss work because of the pandemic. The first is the qualified sick leave credit. And this is for folks who were unable to work because they were either under quarantine or isolation order, or they were advised by their healthcare provider to quarantine, or they were experiencing COVID-19 symptoms and went out and sought a medical diagnosis. And what it ends up being is $511 for self-employed folks, I want to say, $511 per day, or 100% of your average daily self-employment income up to 10 days. So if you had to miss work for these reasons, you may be able to get a credit. Qualified family leave credit works very similarly. This was for folks who were unable to work because they were caring for someone impacted by COVID-19. And this could be somebody who's actually sick, or it also could be if you have a child and their school or care provider was closed because of COVID-19. So in this case, you get $200 per day, or 67% of your average daily self-employment income, up to 10 days if you're caring for someone who got sick, or 60 days if it's because your kid's school or childcare provider closed, and they did increase that from 50, used to be 50 days, now it's 60 days. So good news all around. This credit goes for periods through September 30th of 2021. So if you missed work between January 1st and September 30th of 2021, because of these reasons, you can potentially get a credit. Okay. Business meals deductions. This is another big one for my business owner folks. Normally 50% if you take a prospective client out to eat, or somebody related or an actual client out to eat, normally 50% deduction. In 2021 and 2022, it's 100% as long as you go to a restaurant, as long as you're eating in a restaurant, purchasing the food from a restaurant. They've kept everything else the same. Entertainment expenses are still not deductible. De minimis fringe benefits, things like coffee or snacks, are still 50% deductible. But if you like to treat your clients to lunches or whatnot, and you want to discuss business over food, you can get a 100% deduction this year. It's great news. Another thing to be aware of, a not so good thing, in 2020, they offered the option to defer your self-employment taxes over 3 years. That is no longer an option. So that was only a 2020 thing. It is not an option in 2021. So you're going to have to pay all the self-employment taxes you owe this year. All right, my friends, that's all I've got for our 2021 tax law changes so far. I'm sure we'll be back here with an update probably in January when we learn if anything else comes out of Congress. But in the meantime, I wanted to remind you that spots have opened for my 2022 annual tax prep package. This is everything you need to get your taxes done and not stress at all, not even a little bit. This includes your 2022 annual tax return prep, your 2022 quarterly tax calculations, 4 quarterly tax planning calls with me to get all of your questions answered, ongoing tax support unlimited for the entire year and plus some. It goes actually through April of 2023. It includes my Biz Money bundle, my cash flow tracker, my budget tracker, my profit calculator, my money meetings toolkit, and it includes access to our membership through December 31st of 2022. You get a one-year access to that membership. You can get all of the details by going to megkwheeler.com/tax. And most importantly, when you sign up by December 31st, we are going to do your 2021 taxes for free if you're a new client. So if you are looking for someone to take the tax stress away from you, someone to handle it, do it right, deal with all these tax law changes, you're going to want to grab your spot, and you're going to want to do it before December 31st so that you can get that 2021 taxes for free deal. We have limited spots. They will most likely sell out. So head on over to megkwheeler.com/tax to grab your spot. Thank you so much for being here. I'll be back here next Thursday for another Tip Thursday. I hope everyone has a great weekend. I will see you all then.